Okay, cool. All right, so this is the last class for the day. And this wasn't scheduled, so I apologize for that, but it will be recorded. Sorry in advance if there's any foul language, but you can't record me very long and probably not get something. A few of the things, I get a lot of DMs and I read a lot of stuff on StockTwits. So I wanted to clear up some of the myths out there, and I wanted Maria and Teresa and everybody to be able to talk about where they've seen people go wrong, tell a few stories, blah, 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 and have this out there for especially some of the people that haven't been with Black Box real long. Some of you guys that's been with us for a long time know all these things because we talk about them a lot, but we do have a ton of new people. So one of the things I wanted to talk about, days to cover. I see on StockTwits every day about days to cover. Pick some bullshit penny stock. Oh man, the market makers have got, or the shorts have got 2 days to cover. Get in now and let's make them cover higher. No, listen, that 2 days to cover, let me explain how that works. If a stock trades 1 million shares a day and there's 2 million shares short, that's 2 days to cover. What they do is take your average volume, your short amount, and that's how many days to cover. So if there's 5 million short and it trades 1 million shares a day, then it's going to take us 5 days to cover. If there's 10 million shares short and there's average of 1 million, that's going to take us 10 days to cover at the average volume. So I've never got an email or a phone call or a letter in the mail saying, Tim, you've got to cover that short tomorrow. There's 1 day to cover. That doesn't happen. Ameritrade has never called me and said, you have to cover tomorrow. E-Trade has never called me and said, you've got to cover tomorrow. That doesn't exist. Now, there are days to cover, and I'm not denying that. I use that, Pete uses that, several of us use that. So it's good information, but that doesn't mean that everybody's going to cover in that time. That just means how long it would take if we all decided to at the current volume without raising the volume. One of the other things I see a lot is, oh man, the market maker come down and got my stop loss. Stock's trading at $3. You got your stop loss at $2.25. It's traded 2 million shares. That market maker did not spend $1 million to come get your $1,500 stop loss. I promise that didn't happen. Now, if the stock's trading at 228 and you've got a 225 in there, would somebody sneak in and get it? Probably. Are they going to drop the stock 50 cents to get your 1,500 bucks? No. It's too risky for them. And you got to think, they didn't get the name market makers because they were stupid. They control everything. They're not spending $2 million to go get your 1,500 bucks. Myth. So there's a lot of stuff like that I see on a daily basis. It just drives me nuts. Not just StockTwits, anywhere. You'll see it on Twitter, Facebook. I try to correct it when I see it. I've really got bored trying to do it. So that's a couple things. DCTH. Let me tell a story about DCTH one time. I remember when the stock was trading at $5, dropped to 3, a couple people averaged down, dropped to 2, they averaged down more. Last I seen the stock was at like a couple cents. So that's one of the reasons we don't average down. That's one of the reasons we don't average down is because you just never know, especially in a shitty company. It might be one thing to average down in NVIDIA or Apple. You're in Apple at 175, it drops to 150. Pick some up. It's a great company. You're in it for the long term. I get that. If you're in DCTH or RGSE, Real Good Solar, at GVO, the list is infinite, of stocks that went from $5 to 1 cent. And I see them, they're like, man, I've got a $5 average, so I've got to buy some more at 3. No, you don't. You should have already cut and bailed. Another thing, stuck. I hear a lot, and I've seen people in Black Box. Oh man, I bought it at $3. It dropped to 220. I'm stuck. No, stuck is a choice. Stuck is not a technical term. You do not have to be stuck. It's your choice if you decide to remain married to that stock, or you can cut it. I just cut it. I know Maria was going to mention bags here in a little while, so she'll get into that. But there is no such thing as stuck to a stock. So I wanted to get that out there too. Now, can it work that you average down? You bought it at 5 and you bought some more at 3, and then you bought some at 5 cents and you've got your average down to 13 cents. Yeah, it's possible. You might get out. It's possible, you know, I might be on my back deck, see a UFO fly over the backwoods of my house. The UFO sees a Bigfoot, jumps out, fucks it, and National Geographic records it. It's possible. Probably won't happen, but it could. I'm not saying it can't happen. I'm just saying the likelihood is pretty thin. So anything's possible. I've seen a lot of weird shit in 20 years of doing this, but it's highly unlikely. So I just would rather you avoid the situation than to need a Bigfoot and a Yeti to get you out of it. See, I don't like seeing people that are stuck, married to stocks and averaging down. Like I say, there's a difference in averaging down in NVIDIA and Apple, AMD maybe, and real good solar. It's just two different things. Another thing I see a lot of people do, it's like, and I've done this myself, everything I'm telling y'all, I'm guilty of. Every mistake you can make, I've made every mistake in 20 years, probably some of them 4 or 5 times. So all these stories that I'm telling y'all, they happen to me. So I'm talking from experience. I'm not giving somebody else's experience and making fun of them. I'm making fun of myself. The Fiji story, I did that. It wasn't Fiji, but it was something similar, right? But what a lot of times I see people, it's like, man, I'm up 490 bucks. When it gets to 500, I'm gonna sell. Man, cut it. If the chart says cut it, cut it. Trying to wait on that 10 bucks could cost you the whole trade. I've done it. I've done that. I'm like, whoa, man. I remember one time years ago, I had fell under the $25,000 margin, and I was at like 24,930 or something. I'm like, man, if this trade just gives me 70 more bucks tomorrow, I don't have to worry about this bullshit. And I think before the day was over, I was probably back under 24, just trying to chase that 70, 80 bucks I needed to get back to the 25. All I should have done was woke up and trade the next day like I normally do, and I'd have been fine. Instead, I blew $1,000 chasing 70. We've all done it. Maybe not y'all. I'd like to prevent y'all from doing it. I've done it more than once. Anybody that's been trading long enough has looked at a whole number and said, you know what? As soon as I hit that, I'll sell, and it never hits. So that's one of the things I'd like to see people prevent. A lot of this conversation is what I'd like to see people prevent, like the Fiji story. Guy buys MGTI at $2, tells his wife, hey, honey, I used our Florida vacation money to buy MGTI. Stock goes up to $3. Hey, honey, we're not going to Florida anymore. We're going to California. I don't know. Stock goes to $4. Hey, honey, we're not going to California. We're going to Hawaii. Stock goes to $5. Honey, we're not going to Hawaii. We're going to fucking Fiji. Pack your bags. Now, he wakes up the next day and the stock's back at 4, and he goes, man, I should have sold that at 5. Why did I not do that? Now I've got to wait till it goes back to 5 and sell it then. And you've already messed up. You should have already sold, number one, but B, you've done told yourself when it goes back. So what happens? Next day he wakes up and it's at 3. And he goes, you know what? I should have just took the 4. You know, Hawaii is still better than where we started. So next time it goes back to 4, I'll sell it. Goes back to 2, drops back to 3. He goes, man, why didn't I take 4? I'm such an idiot. But when it goes back to 3, I'll take it. Next day he wakes up, stock's back at 2, where he bought it. And he goes, shit, I was going to Fiji, Hawaii, California, now I'm going back to Florida. What happens? He goes, but next time it goes to 3, I'll sell it. Wakes up the next day, now the stock's at $1. $1. He's lost half his money. Lost half his money. He's not even going to Florida anymore. He's lucky if he's going to the mountains. So there again, stuff I've done. Stuff I've done more than once. You know, let a good trade go bad and then sell. And a long time ago, I learned, you know, play the people. Don't let them play me. Play the people. Some people will call it Trade the Trader, which I heard there's a book out there called Trade the Trader. If there is, I recommend it just because I like the name. Never read it, but it's a cool fucking name, so read it. Trade the Trader. I agree. I play the people. So it's easy to spot those MGTI situations. Andrew Luff's good at it. He sees these stocks go from $20 to $60. He throws a short on it. He knows people are going to panic out, and he makes 50% on his money. Maybe nothing wrong with the company, except it ran up too much too fast. So, you know, that's another thing people do. We always talk about Tim Shoes going public. Tim Shoes IPOs at $5, and Maria over here goes, wow, that company looks pretty good. I ought to get in. You know, I think I'll wait. Sees it the next day at $6 and goes, why didn't I buy it at 5? Sees it at 7, goes, why didn't I buy it at 6? Sees it at 8 and goes, why didn't I buy it at 7? Next thing you know, the stock's at $10. Now Maria buys it. I'm sorry, I'm using you as an example. But now the stock's already doubled. Now Maria's chasing it at that point in time, we're already selling, we're done with it, right? We're cutting it. It's ran up too much too fast. So people like to chase and hold too long. If you can break those two things, if you can break those two habits right there, Fiji and Tim's shoes, it will help you a long way in the market. Just bad habits that I see a lot of people do. I'm still guilty of it sometimes myself. Every now and then I'll get stubborn and go, man, if it, I bought those weeklies on Apple. If it just go up 50 cents, next thing you know, it's down another buck. I'm better off just to cut it when I have that first feeling of if and when it goes back. If I would cut right then, 90% of the time I'm better off. Not all the time, but 90% of the time. There's exceptions to everything. Like I said, flea and Yetis. Maria, I want you to talk about bags real quick.
Hey guys, thanks for joining us. I wanted to talk, there's a couple things I actually wanted to go over. One of them is holding bags. Tim said earlier that being stuck is a choice, and I completely agree. You don't have to stay in a position, ever. You choose to stay in a position. And by staying in it, you often end up hurting yourself more, especially if it's moving against you. I'd say 99% of the time, it's better for you to just cut the position, take the loss, and start over. Find something else to play. So that's just to kind of piggyback on what Tim was talking about. One of the other things I wanted to talk about was people sleeping with loser stocks, and it's kind of like it kind of goes into the holding bags. Hopium, we say it all the time. Hopium is not a trade strategy. Now, I know that the feeling of a stock continuing to run after you sell, it does suck. It definitely sucks. But I guarantee that watching all of your profits evaporate is a lot worse. So again, these are people that instead of cutting those losses early, they are staying in the position. What we, again, would recommend is that you get out. When you stand in the way of a falling knife, it's a surefire way to get cut. So the other part is, I know that it feels really good to get every single penny out of a run, but trading or staying disciplined in your trading and being consistently profitable is what you want to aim for. That's the only way to survive. The other thing that I was going to go over is holding through events. So it happens often in the bios. It happens all the time on StockTwits. You constantly see people that are saying, oh, so-and-so stock has data coming out, I'm buying shares, and they hold through that event. Now, when you're holding through an event, and that could be, again, it could be a phase, whatever data, it could be an earnings release, whatever the case might be. It's true that those situations, they offer the potential to make money. But with that potential comes a lot of risk. When you're holding or buying and holding ahead of that event, it's probably one of the riskiest moves you can make as a trader. I don't care how much due diligence you do, how much research you do, you still never know how the market is going to react. You may be able to predict the outcome of the event. You might be able to say, yes, they're going to pass their phase 3. They're going to get FDA approval. Yes, they're going to beat this quarter. They're going to guide up. What will always remain unknown is how the market is going to react. NVIDIA is a perfect example. NVIDIA has, not this past quarter, the quarter prior, beautiful quarter, record numbers. I think there might have been one little number in there that didn't even really matter in the long run because they were transitioning from one product to another. Gorgeous quarter. And was it last year? It might have been the quarter prior to that, actually. Instead of running, that stock tanked. People lost a lot of money there. So you will never, ever, ever be able to predict accurately how the market's going to react. You can make an educated guess, and I'm not saying that if you don't want to YOLO something or whatever, I'm not saying you can't do that. You can, but what you have to understand is that the one thing that you will never be able to know is how the market is going to take, or how the market's going to react to that news. And I think Tim is going to talk about some other stuff. Actually, before he goes, there was one other thing I wanted to go over, and that was on emotion. A lot of people, especially newer traders, they trade very emotionally, and that will kill you each and every single time. It is one of the biggest challenges for traders. And that's, again, figuring out how to take the emotions out of a trade. It doesn't matter how long you've been trading. You could be a veteran trader, you could be a rookie. At some point, you will struggle with trading unemotionally in an environment that is driven highly by sentiment. Every single trade has an element of psychology to it. What I want people to understand is that there is no need to trade out of anger. There's no need to bench trade. If you miss a trade, it's okay. If your last trade didn't go in your favor, there's no need to go. If you went long a stock because it was supposed to break out and it didn't, there's no need for you to turn around and short it immediately because you're mad. Now, if you see a downtrend, that's another story. But there's no need to trade just because you're mad. I've read a quote once that says, the key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. And that is a quote that I keep on in my notes all the time, because it's so true. You have to be emotionally disciplined. When we say you need to be disciplined in your trading, you need to have a plan, you need to have rules, you need to execute your plan, you need to do your due diligence and stuff like that. That is all equally as important. But I guarantee you, if you do every single thing right, if you don't have a handle on your emotions, everything else goes out the window. And that's all I was going to say. Tim, it's your turn.
Okay, I was going to hit the bags thing a minute. Also, why is those fucking notifications still going off?
They shouldn't be.
But I still hear them. Is it on yours?
I don't think so. Yeah, sorry.
Oops. All right, so when it comes to bags, you know, and I thought this was the story he was going to tell. I used to tell him in Black Box all the time, pretend you just won the lottery and you just flew to Paris on a Lear, on a G6. I have no idea what you just said. On a G6, they just put you in a Rolls Royce to the finest hotel in the world. You're not going to carry your bags the last leg of the journey. The bell guy's going to, and you're going to tip him. So let somebody else carry your bags. The only bags y'all should be carrying, Chanel, Louis. DCTH is no bag you could go buy online. If it's not, then don't carry it around. Buyouts. Every day on StockTwits. Oh my God, these little 30-cent bios are about to get bought out by Merck and Pfizer as soon as they pass their phase 3 FDA, whatever it is. Listen, if Merck and them thought they were going to pass anything or have anything substantial, they would have already bought them out. Now, maybe one a year you'll see that actually really does get bought out. And usually they're $4 or $5. Never did a reverse split, and you will see an occasional buyout. But for the most part, all those companies getting bought out are not going to get bought out. They're going to do reverse splits. They're going to have, crazy money being raised. If Merck was going to buy those 30-cent companies, they wouldn't even know they did it. It wouldn't even affect their balance sheet. They could go buy all those 30-cent companies tomorrow, every one of them, and not even affect their balance sheet. So again, other myths, right? Teresa, I wanted you to talk about, you've seen a lot in here too. So tell us some of your stories.
So a few things, guys. One of the things that I see on the StockTwits a lot is people making a big deal out of insider buying or selling. So when you see those alerts, so if somebody is an insider and they want to sell, they do have to do an SEC filing. Just take it in context. Just because somebody sold 20,000 shares, but they're still retaining 2 million. That's not a big deal. They're just doing it as part of a scheduled plan. And at market highs, it makes sense to sell some of your shares. Where it gets a little dodgy is what we just had with Intel not too long ago. If you look back at the CEO's sales, he had not sold more than 2 million shares at any other point. Right before the security flaw hits, he sells everything he owns, $39 million worth of stock, and he only retained exactly to the share what he was required to retain as part of his employment agreement. That is something that you might want to look at. But, and then on the flip side, we've actually had quite a few ERs come out. The ER sucked, but the executives came out and said, oh, we're buying stock. And so everybody gets excited because it's insider buying. Well, if you've got a bad ER, it's kind of a way to offset it. So you might be able to play the nice little pot, but just kind of take those buys and sells in context. The stuff that I get a lot is too big a position size, particularly in a market where we have some volatility and some turbulence. So, and this folds into, there are days when it's okay not to trade. So first, let's talk about right now in this market. It makes sense. I mean, Tim's thrown around 30%, Pete threw around 20%. It makes sense to be a little more cautious with those long positions. Everything's kind of looking good now, but we still have quite a bit of volatility. So you know, focus a little bit more on day trading, or if you are wanting to go long on something, start your beginner position and give yourself lots of time. Time for if we do get a drop in the market, that position is still okay. And then I get a lot of, what are you trading today? What are you trading today? What are you trading today? There are days when there will always be something to trade depending on your style, but let the trade come to you. It does not mean going and forcing a trade, digging for something, revenge trading like Maria touched on. Make sure that you're grounded and settled and are looking for a trade that has the right setup, not just trading for the sake of trading. The other thing that I get is make sure, this is really important when it comes, where I've seen it the most is in bios. Make sure that you're kind of aware what else can impact your trade. So we might have, you know, Gilead doing great. And I'm just using these as an example. But if Gilead has a drug that a competitor could actually have a better drug or has a better outcome, then Gilead will get hammered. So if you're going into some of these things, just be aware of them. Another example is some of the semis and their connection with crypto. Just be aware of if you're going into a position, what else, particularly a long position. If you're day trading, none of this matters. But if you're picking up a long position, just understand what else could come in and impact that trade. So I think that was my notes for now.
Cool. If anybody has any questions, we can hit those. You know, like I say, this was just something we wanted to kind of just get out there, especially people that trade penny stocks. You know, most of the stuff I went over affects them more than it does the options traders in here. But yeah, if anybody has any questions, yeah, we got one right here. How do I look at that? Oh, you just click it.
So this question is from St. Dev. My question is, do you ever buy or suggest people to buy pre-market or after hours on good ER reports, short on bad ER reports, or wait till market opens to play your trades?
We will trade those after hours. You'll see Spectre's real good at after hours trading. Wyatt's real good at after hours trading and pre-market trading. So sometimes, absolutely, especially if you're having the wave theory. You can't do options, you know, pre and post, but you can get in on the stocks. So yeah, we do a lot of those,
Any chance you have a shot of the wave theory so we can explain that? I got questions on that last week.
Yep. I have one on my other computer. I mean, it's not here, but basically you have a lot of brokerage firms that open up at different times. Ameritrade just started opening at 6 Central, but they used to wait till 7, so it had more effect then. But you'll see like E-Trade will start trading at 6, and you know, say something's at $10 and it goes to, you know, $10.75, and then more brokerages will open up at 7. Like I say, Ameritrade just in the last 6 weeks started trading earlier, or maybe 2 months. And then you see it go from $10.75 to $11.50, and then the Robinhood people open up at 8, and then you know, all of a sudden it goes from $11.50 to $12. So I like to get in on that first wave. Ameritrade kind of screwed that up a little bit when they started trading an hour earlier than they used to, because that was a big push. You could see at 7 Central, those guys coming in. So, you know, I don't have a picture of that, but we definitely buy a lot pre-market and post as well. Oops. And actually, you get a lot of Continuation. If you've got real heavy volume in the afternoon on a good ER, most of the time it will continue the next day. For a trader who can't watch the market all day. Swing trading. What trading strategy recommendations do you have for a trader who can't watch the market all day? Swing trading. If you can't watch it, don't try scalping. Don't even try the intraday stuff. That you want to buy the Visas, the Walmarts, and we found 1 million of these. Thors, not this last round, but the time before that. So you want to get in those swings before the ERs and sell, you know, what does Pete call it? Vega expansion?
Yeah.
I call it reverse decay. It's not really a technical term. It's something we kind of just, you know, one off. But yeah, that's where you would be. That's where you'd be the best off is swing trading. Absolutely. I keep trying to use the mouse for this, and it's Apple was slammed by Goldman Sachs, Morgan Stanley, Kramer, and every other guy on CNBC prior and on ER, as if it was the end of the world. How to digest some news when you are just a year into trading, just like our elections media said Trump won't be happy, President's Day Trump. Man, the Apple situation was tough. That actually dropping down to 150 was insane. Actually may hit 149, so I'm not sure. I know Pete got some cheap that day. When you get everybody motherfucking in stock like Kramer, Morgan, and Goldman, it's hard to say what to do. Short term, 90% of the time in the short term, you're better off to go ahead and cut it and buy it back. Whether it's a week or two later, at least, you know, if you sold Apple at 170s when all that happened, you definitely had plenty of opportunities for a better entry. That doesn't always happen. Sometimes we see them come out and, you know, go off on these companies and they actually go up. So Apple had more than normal. I mean, Apple always going into ER, there's always somebody questioning something. Oh, their services revenue. Oh, their phones this. What about the fucking iPad? There's always something being questioned. But this quarter was definitely intense for Apple. I mean, that was hard for me to watch, and I'm an Apple bull. But this quarter, you know, it actually kept me from jumping in. So it happens to all of us in that situation. So Apple, yeah, I mean, it happens. Let's see here.
And take the part about how do you digest the news, like the election media said Trump won't, but happy President's Day, Trump. He used to have a lot more pull with his tweets than what he has right now. At least that's what I've noticed over the last year.
Yeah, sort of like Elon Musk. Elon Musk used to could just wake up on a Friday and say, "Good morning, flamethrower," and the stock would run 10 fucking bucks. We used to trade it every week off Elon tweets, and then they kind of lost luster. But God, that was fun when it lasted, right?
Yeah, those Friday morning tweets, remember?
Yeah, absolutely. Are the Kramers not big boy pump and dumpers? I'm not a big Kramer fan. The only time I listen to Kramer is during an IPO. Fitbit IPO, I can remember it going from 30 to 40 something in 2 days. Goose was a big IPO. Twilio, we killed Twilio. The thing about Twilio IPO, if I remember correctly, they IPO'd the day of Brexit. So that night we're all owning Twilio. I believe it IPO'd at like 2021. We're still in at 26 that night, going to flip it the next day into the Kramer pump. Brexit fucking happens. It goes right back down to like 22 and still closed at like 30 the next day. Anybody else got a question? We can talk about anything. We can talk about something, bad trading habits you have. What would we do about them? Ask us anything.
Here's something that I'll add to it is we focus a lot on how do we make money? You know, what's moving? How do we make money? And we love that. We love making money. One of the things that a lot of traders tend to ignore is the downside. One of the most important roles or things that you should be doing as a trader is managing your risk. There's a lot of different ways to manage that risk, but I think that one of the things that often gets us in trouble is not recognizing the downside. So when you're trading, think about what ways or what things you can do to help mitigate that risk. We have another question. ATL Trader says he's pumping black box stock. That's awesome. We love it.
Right on. That's the one rule of Fight Club. We don't discuss Fight Club black box. We don't discuss black box. Process over proceeds.
Absolutely. Your process is absolutely more important than your proceeds.
What was one I seen the other day? Trade the trend, not what you think the trend should be. Which remember, what was the guy we've kicked out a couple times? Stockman always decided what he thought the trend was going to be.
Yep.
Oh my God, it's ran 5%. It's got to go down 5%. No, it doesn't. Ride that trend. It may go up 50%. Ride the trade the trend. Don't let you know.
And guys, that's different from a contrarian trader.
Right.
But when we're saying don't go opposite the trend, that means mid-trend. Don't think that if the trend is strong, that you're going to short something. If the trend is long and it's been long and it looks like it's continuing, that doesn't mean that it's a good point or it's at a good spot to short it. A contrarian trader will play the opposite side, but there is a lot of technical analysis that falls into that. And I can guarantee you that most of the contrarian traders that I know, they're not going to short something in the middle of a strong uptrend.
Right. Andrew left. I mean,
unless you're Andrew left.
No. But I mean, I remember, was it Roku a while back?
Yeah.
You know, he, it popped way up there before he got on board. NVIDIA, he always lets get to the top before he starts getting on it.
Yeah, and he gets killed.
Sometimes he gets killed. Absolutely.
Next question. Am I wrong to treat the stocks on a one-night stand thesis?
Absolutely not. You know, that, oh God. I don't want to say it on the webinar, but we used to talk about the pretty woman syndrome. You know, what happened with Julia when she married the guy, you know, he fell in love and it all worked out. That happens in the movies. That very rarely happens in stocks. You know, for general rule, unless it's Visa or Walmart, it's just something you found that day, you're better to cut in. Trade it, don't fall in love with it. Yeah, don't let her start stealing your CDs. Guys and gals, we appreciate that y'all spent a lot of your Monday with us.
Yeah, guys, thank you so much for spending time with us today. We appreciate it. I know it's been a long day. There's been some really awesome information given out. Q&A on Tuesdays and Thursdays after the bell, after ERs, during ER season. If you have questions, DM us, hit us up in chat, either main chat on the Black Box website or on Discord. Let us know what concerns you have. We're here to help you.
Yeah,
Teresa,
absolutely.
do you have anything to add?
Yeah, I was just going to say the other part of that, if you have questions during the trading day, just recognize we are also traders. So if you have a question, just tag all of us in main chat. Your question will get answered much faster. That way, at least we can read it out because it's easier to talk than it is to type during the trading day. And I also just want to thank you again. Your presence here just shows how committed not only you are to trading, but the most important part is continuing to educate yourself, learn more about the market, learn about different approaches, and that's how you become a long-term trader.
Yeah.
All right, guys, have a great rest of your Monday. We will see you bright and early tomorrow morning. Should be a good week. We have some good ERs on deck. Let's make some money.
Thanks, guys. Bye-bye.
Thank y'all. Bye-bye.